In today's Forex midweek analysis, we're talking about the DXY, the Euro, the Pound, and the Dollar Swiss franc as we approach a lot of PMI out of Europe and the US on Thursday. So this is a brand new series, guys, that if it gets enough traction, I'm hoping to do every single Wednesday to give you guys an update on a few different charts. So be sure to give this video some love, hit that like button. And as I always say too, it takes me hours to put together these videos and blog posts and a few seconds to like it and subscribe. So be sure to do so if you find this content valuable. So looking at the DXY, this is the range back here that we talked about that is breaking down from between 101.80 here and 100.2. So this range back here in 2024, this is what we talked about previously, right? These highs and lows from back here, you can see where this is what the DXY was stuck in here for a couple of weeks. And this 100.2 level through here is the one that I said to keep an eye on because this is what it was going to take for the market to gain some momentum here. It was either going to break below 100.2 or we were going to get that break above channel resistance to target some of those imbalances. So the market made its decision on a Tuesday with a close below 100.2. So if we take a look at that here, you can see where we got the resolution on this candle right here on Tuesday. So notice here we got the close below, the daily close below here, and that's what opened up these downside targets. Now at the moment there is still an imbalance through here because notice how Tuesday's candle opened here and we got the move straight down. Okay, so there still is, an imbalance up here that could be tested here from the DXY, but so far looking relatively weak today and opening up those targets around 99, potentially the low down here around 97.70. Now, here's where things get a little bit tricky though for the DXY, and we can see the same thing with the EURUSD that we'll talk about next, is that on the daily time frame, we have the market holding below 100.2, right? That's easy enough to see. There's no question about that so far with that Tuesday close and today following through to the downside. However, if you look at the weekly time frame, this is where things get a little bit more confusing because notice here on the weekly, these lows from back here in 2024, technically the DXY closed the last 2 weeks above. Now, it doesn't mean that the DXY can't close this week below. However, what it does mean is that 100.2 is going to be, and hang with me here, this might get a little bit complex, but it's also very simple once you understand it. 100.2 is going to be daily resistance. Okay, the daily chart is holding below it, right? So this is going to be daily resistance following the daily close below on Tuesday. However, at the same time, we have the weekly chart holding technically above these lows. And the reason for that is because this week has not closed yet. We still have over 2 trading sessions in this week. And so even though you are seeing the DXY trade below 100.2, technically this is still weekly support. Okay, so we have daily resistance at 100.2. However, 100.2 is still weekly support just because this candle has not closed yet. And I trade based on closing prices. And if you've ever watched a daily session scramble to get back above or below a key level, you know exactly why I do that. So right now, guys, we do have still some indecision. We have a little bit of follow through down toward, these 99 lows down here. However, again, it's going to come down to the weekly chart. And also we have PMI figures out of Europe and the US on Thursday. So a lot of PMI inflation data out of Europe and the US on Thursday for these markets to deal with, and that's going to shake things up. So we'll see if the DXY does hold below 100.2. If so, then we're looking at these lows down here around 99 and following the down here toward 97.70, this low as well. One thing I talked about recently too, if you go back here on, let's say, the 5-day time frame, and we move out here toward these lows that make up that 97.70 level. Okay, so back here, you can see that back here in 2022, this was a very well-defined level. In fact, I'm going to go to the daily and just show you these lows back here. Okay, so these lows through here, this is our 97.7 level. Okay, and what you'll notice is that we've got a low here, and a low here. So very well-defined there at 97.70. And the thing to note here is that this recent low did not fully retest that. So you can see that the DXY came close. However, it did not fully retest that 97.7 level. So that could be indicative of a move down here to sweep this low. Okay, and that's only if we get that weekly close below 100.2. And obviously PMI figures on Thursdays push the dollar lower. Okay, if that's the case, then I think we do see a retest down here, a full retest of 97.70 to sweep this low from back here and get that full retest into that 2022 level. Okay, but still a lot of ifs out there, right? Still a lot of ifs. I know it looks bearish right now, and it is. However, again, you've got to be careful just because the weekly chart, we do have those last 2 weekly candles closing above 100.2, and we also have all of that PMI on Thursday. So next up, let's look at the EURUSD, which is breaking above 112.75. Now, this is another one, guys, that is, yes, it's breaking higher. Yes, the uptrend is very much intact. I am not trying to say that I'm bearish on the euro because I'm not right now. But the one thing that you've got to be careful with is that even though the daily chart on Tuesday, you can see this was a very marginal close above 112.75. In fact, I think it was about 9 pips above 112.75. So very, very close to this level back here that it did reclaim on Tuesday. So we are getting that push higher. And in fact, I told traders in our group to expect dollar weakness on Wednesday following that Tuesday close from the DXY and the euro reclaiming this level. Okay, so we knew that, we were likely to get some upside here today, or at least that was likely, and we are seeing that. But again, you look at the daily chart, right? It is starting to reclaim this area back here as well as this one. Now, here's where things get a little bit more confusing. If you look at the weekly time frame and go back here, what you'll notice is that we have these two highs. So this one back here in 2023, and we have those 2024 highs back here. So at the moment, the EURUSD is still technically below these on a weekly closing basis, okay? The key there is weekly closing basis because this week has not closed yet. So even though it looks like we will get the weekly close above these two levels, right, we don't have that weekly close just yet. So we technically can't call this a weekly close above these two levels, or we can't call this area down here support on a weekly closing basis simply because we don't have that close just yet. All right, so I hope that makes sense, guys. It is still a little bit indecisive here with the market range bound, but at the same time, you have to respect what's happening so far today. If this does hold up, then you've got this area back here. So 112.75, you've got 112 that the market is starting to reclaim, right? And so if it gets above here, holds above here on the weekly, then I do think we're targeting areas like 114.25, and then potentially that recent high up there just above 115. Okay, so the uptrend is very much intact. This is not a case. I am not trying to say that I am bearish on the euro by those comments. All I'm trying to say is that you do have to take this move with a grain of salt because you have multiple time frames to review here. And when you do that, things do get a little bit more confusing, right? Because you've got this high back here, you've got these highs through here, and you've had the weekly close last week below both of those. Okay, so the euro still has to close this week above here in order to flip this back to new support, okay? So that's the bottom line. If it were to close the week back below 112.75 and 112 with the DXY closing back above 100.2, now you've got a situation where this area is still resistance, okay? So just keep that in mind as we move into Thursday's PMI. And, you got to stay on your toes with these markets, guys. That's the bottom line. For the most part, everything has still just been very sideways, okay? So yes, we have the uptrend, but the sideways price action, you've got to be careful there, especially with the mixed signals between the daily and weekly timeframes. All right, so next up, let's take a look here at the pound, which is breaking out from the bull flag that we talked about recently. So you can see here, really nice uptrend, really nice impulsive move back here. All right, so very aggressive rally up. We had this nice consolidation into a bull flag. You can see we've got lows down here and we've got highs up here. So we had the close above on Monday. Tuesday retested as new support, and we are getting that follow through so far today. However, we know that 134.40 is going to be significant resistance simply because it has been ever since back here. Okay, so if we zoom out, you can see this high from back here in 2024. We know that this area is going to be significant, and sellers are not going to back down from this easily. They're not going to go down without a fight. And we are seeing that so far today with a wick above this area. In fact, this today is a high going all the way, a fresh high going all the way back here to February of 2022. Okay, so all in all, guys, it still looks bullish. And the same thing with the EURUSD, guys. I'm not trying to say that these are bearish markets because we have an uptrend here. Okay, we have a very established uptrend. We have the market breaking out from this bull flag right here. And we also have it pressing on these highs. Okay, so all in all, you have this market in an uptrend, you have bullish momentum at your back, okay? At the same time, though, you've got to be careful because, again, we have PMI figures on Thursday. That is going to shake things up. And also, we have 134.40 resistance, which the pound has not closed above yet, okay? So GBPUSD still has work to do here. If it can get above this area on the high time frames, okay, so break above here, this area flips to new support. And we're looking at potentially a move back there toward 136.30 and 137.50. Now, the bearish scenario for this, because we have to weigh out both scenarios, especially in markets like this, if we were to get the pound rotating lower, let's say on Thursday with those PMI figures, if they do favor a bullish dollar, which I'm not saying they will, I don't know if the US dollar has it in it to turn bullish and reclaim some levels, but you never know with these markets. So if that were to happen, this resistance holds up, let's say, And this down here is going to be your critical support, 1.33. That's going to be the level to watch for the pound because any close below this would be bearish, okay? But this is going to be key support for now. You've got the top of this channel, and you've also got these highs back here, these daily highs, and closing prices in that same area, okay? So 133 is going to be support, 134.40 resistance, break above that, 136.30, okay? So straightforward enough, still a very range-bound market, though, and this is why you've got to stay on your toes, though, guys, because on the one hand, we do have that uptrend, but on the other, and you could look at this and say, well, yeah, but we have this breakout here, okay? That's great. However, at the same time, you've got this range, right? The market is still just range-bound. So just keep that in mind when you look at these markets as we head into Thursday's PMI. All right, so now for the dollar Swiss franc, guys. We did get the breakdown on Tuesday. I mentioned this one yesterday. We talked about this in a video. And what I said here was that looking at the 4-hour time frame, the resolution that I was looking for was we either broke above this trend line up here or we broke down below 83, okay? And that was the resolution. Now, I want to be very clear here. I want to explain something because yesterday I probably said something like my ideal scenario was a break higher. And I think that some people interpreted that as me saying that the likely scenario was the break higher, and that's simply not true. Ideal does not equal likely. So let me explain, okay? So if we had gotten the break higher yesterday, on Tuesday, or even today, and we had gotten that break above these levels, and like I said in yesterday's video, it was going to take a break above this trend line here, and also a weekly close back above 84. If you saw yesterday's video, you know why. So if we had gotten that, the reason this was my ideal scenario is from a pure risk-reward perspective. Okay, the risk-reward on the upside here would have been, in my opinion, much greater, okay? Because you would have had this area down here to anchor your stops against, and you have imbalances like this back here, this breakdown back here. You have imbalances like this up here that become your target/magnet. And so the risk-reward there, this was the ideal scenario, but again, ideal does not equal likely. The only way that my ideal scenario would have become likely was a break above this trend line and a weekly close above 84. That is it. We didn't get that, and so that idea, at least for now, is off the table, okay? But again, I want to be very clear that, ideal does not equal likely, and so I think a lot of people get that confused. I had a few comments saying, well, the market broke down, we got a big move, like you said, but it wasn't what we were hoping for, and my response is I wasn't hoping for anything. I was just waiting for resolution. I mean, even if I'm in a trade, guys, I don't hope for a certain scenario. I know that sounds strange, but I don't sit there and cross my fingers and hope for a certain outcome, just because if you find yourself hoping a lot like that, chances are you're probably risking too much and you need to scale down your position size. All right, so the bottom line is going into Thursday's PMI, we have resistance up here at 83, okay, between 83 and 83.30. This is going to be resistance, obviously, following the breakdown on Tuesday. And on the flip side, you have these lows down here just below 82, okay? So this is going to be support down here, resistance up here. Now, I will still sit here and say that my ideal scenario is for the dollar franc to reclaim this area. I still think that. And it's not because I'm some kind of dollar permeable. It's because I trade fake outs. I trade fake outs on the high time frames, and a move back up here to reclaim this area. Okay, a move back up here would be a perfect example of a fake out. Okay. And I know that, again, this goes back to ideal versus likely. The ideal scenario for me would be a reclaim up here to get that bullish move. And if we got that, then it would become likely. Okay. It would become likely that we would get that move higher if the market can reclaim areas like this. But as of right now, that is not likely. There is no bullish scenario here with the market trading in this area. Okay. So I hope that that's very clear, because the difference here is that the downside, I mean, sure, you could try to target maybe, looking for shorts up here and target this low down here, or potentially this low, this area down here. But again, for me, from a high probability standpoint and a risk reward standpoint, the high probability scenario is a reclaim. It doesn't mean it's high probability right now, guys. But if we get the reclaim up here, that is a high probability chance of a move up here toward imbalances like this. Okay, and the risk reward for a move, a reclaim up here and a move back here versus targeting some of these lows, I mean, this is like, yeah, okay, you can make some money there. But in my opinion, getting this right here and targeting this pocket up here is, more appealing. It's more appealing to me to trade. But first, buyers have a lot of work to do going into Thursday's PMI, because again, I want to be very clear about this, guys. There is nothing to buy here. There is no reason to be bullish on the dollar franc, at least as things stand right now. Okay, so as of right now, guys, we do have a confirmed breakdown. This could also be a bear flag, right? This could be a bear flag following this impulsive move lower, right? Impulsive move lower into consolidation, we got the breakdown very similar to the pound, just the opposite of it, and start to target some of these lows. But really, Thursday's PMI is going to decide what we get here. If you take a look at the high time frames here for the dollar Swiss franc, I mean, this is really what it came down to. And this is what we talked about recently, that on the one hand, you had the market holding above here on the weekly, and on the other, you had these lows back here. Okay, so 84, this is why 84 is significant on the weekly chart, because you've got these lows back here that the market never did reclaim. Okay, you had the reclaim of this low, but the one to really get above, in my opinion, and I said this for the past couple of weeks, was 84, and the market never did that. Okay, so a lot to consider right now, guys, but just keeping things simple. Just to kind of wrap up here for the dollar franc, I mean, if you look at this on the daily, we do have that breakdown below this 83.30 area, and we also have these lows down here. So you've got these lows down here, you've got these lows down here to target, potentially, as long as the market is below this. But if the market, were to reclaim this again, I don't know if the US dollar has it in it to get that kind of reclaim, considering how weak it's been over the past few months. But if we were to get that, we have to weigh out all scenarios. If we were to get this here, then of course that would, confirm a significant sell side fake out and target some higher levels. All right, so that's it, guys. I know there was a lot to cover. Even though markets are very sideways, there is still a lot to cover because we have a few different scenarios to monitor here. And just finishing up with the DXY, again, be really careful because we do have the market breaking below here on the daily. But again, we do still have those last couple of weeks holding above this. So if we get this week closing below 100.2, that would really seal the deal there and open up these downside targets. All right, so trade safe out there, guys. Be aware that tomorrow on Thursday, we do have PMI out of US and Europe. I've said it a few times, but it is important to be aware of because really those are the heavy hitters for this week's price action. Trade well out there, guys. Don't forget to subscribe to the channel and click that bell notification so that you don't miss the next video, which will be dropping tomorrow. Trade safe. I will talk to you then.